TGIF Warriors, Simon, Mike, Bran. How's everyone doing today? Everyone ready, getting ready for the number? Hey, Brian.
Hey, Dale, you all right?
Yeah, I got a little cold. As Blake would say, I'm Sniffles boy today. So, I thought I was sharing it.
Get on some of your magic meds, mate.
Oh yeah,
the morning sexy voice.
Hey, Steve, how you doing, buddy?
I'm good, Dale. How have you been?
Hanging in there. Big number. Some people think that it won't be as good as expected, but
good morning.
Euro double top came in, Ryan.
Yeah, K's off.
Oh, that's right.
He's slunk out the door early on a Friday.
Okay, slunker.
And to be frank, we have
mother slunker. Yeah. Sorry, what? We have what?
Today we are going to get our fix, because after 2 days of not having World Cup, we're going to be having World Cup games again.
2 good matches as well, right?
Yes, yes.
Withdrawal symptoms.
Withdrawal symptoms, yes.
Yes, indeed.
Jonesing. So I had to get out of my S&P short because I stayed disciplined. The 39.50 close was my line in the sand, and it closed at 63. Yeah, nice little rally. Maybe we're going to, almost feel like putting them back out, but I'm wait for the number. Any expectations, reactions that are expected? It's hard to, be Nostradamus and say what kind of move we're going to have. What's the expectation
for the PPI?
Yeah.
So the headline PPI is expected to drop to 7.2% from 8% prior, and the core number to drop to 5.9% from 6.7% prior. So following the trend we've seen in inflationary data. So I think it's going to be a case of how big the variation may or may not be to those numbers.
Okay, 10-year yield, down a little bit.
Needless to say that, especially with Powell, speaking and having the Fed next week, and Powell speaking and setting again the stage for monetary policy in the short term, any surprises to the upside in PPI is going to be, in my opinion, a big mover. Right. So I think the biggest move we're going to see ahead of Powell if we get strong numbers, not weak.
Okay. So I'm thinking that even the 10-year, even though it could head much lower from here, that there's a pop at least coming here. So, that
I totally agree. I think with terminal rates at the moment expected to be at 5%, because that's what the market is pricing in at the moment.
Mm-hmm.
It is extremely dangerous chasing yields lower, at least in the short term now. Yes.
Okay, and gold threatening to take out the high that we had here. Looks like it's going to do it. And silver ran over me a bit yesterday.
Silver overperforming gold.
Yeah.
Not today, but yeah.
Not today, but in general.
Yeah.
I think it's all noise. It's all noise ahead of next week.
Yes.
Ahead of CPI and the Fed. But yeah.
Yeah, I wouldn't be short this chart. Cover up the title of the chart and then ask yourself, would you be short this thing? I don't know. Diverging pretty good. It almost looks like WTI. I wouldn't be short that anymore either. China's, I know it's going to be bumpy, but, you've had a nice ride, waking up to the bearish side of WTI now when you could have been bearish all year, right?
Yeah.
Why not?
Are we at that point where you don't want to short it and you don't want to buy it?
Yeah, okay. WTI is approaching another, the next important zone of support.
65.
Also target of the double top that we triggered, and that comes at 70.5. So that
pretty
is
close.
yeah. So we're getting very close to that. Yes.
Okay. Yeah. So I think the moment's low yesterday, 71.20. So yeah,
Yeah.
not far. Close
No,
enough
not
for You know what I say? Close enough for government
yeah.
work.
I mean,
Right?
70 cents is something crude can cover within a matter of an
A
hour
second.
easily.
A second.
No,
Yeah.
I'm not talking about some kind of announcement or whatever. I mean, even under normal trading conditions, right?
Yeah.
Without any news or whatever, it can easily cover that within an hour, like nobody's business.
Cover that in
So
a minute.
I pay attention to what Grega shows and talks about.
Hey, I'm
And
here.
Hey,
okay.
Grega.
Hey,
Okay, Grega.
you guys.
So, based upon your count in the yen and the dollar, we're most likely approaching some type of buy zone here for
Yeah,
a C, right? In both the yen and the Dixie.
yeah, but as you said, for wave C. So that's only
Yeah.
for the short term, maybe
Yeah.
till next week data. But overall, I think that the dollar yen trend is clearly defined and bearish from that October high.
Yeah.
So that's just a pause, in my opinion, on the way lower.
Yeah. But you said there was a possibility we could trade back up at 140.
yeah.
That's no,
Yeah, exactly.
you even had higher numbers, I believe. So,
Yeah. That
okay.
those moving averages right comes in at the former wave 4, where you have
Okay.
those
Up
swings.
here.
Yeah, exactly.
Okay.
So that's
All right.
the ideal resistance, but sometimes the corrections will not be that deep.
Yeah.
Sometimes they will be more slow and sideways. So this is also what we have to consider, that not all of the corrections are just simple as ABCs.
Okay.
Grega,
Yeah.
it
You want to
starts
take the screen? Want to take the screen, Greg, and show some of your counts
Yeah,
today?
I can. Yeah, sure.
Okay, because
So,
I know
Grega,
you probably revised your count with what you're just saying. You did call this initial leg up to 106, very close.
Yeah.
I've seen counts up around 107.90. Are you in that camp now?
Yeah, basically, I still think that this is the resistance zone here around 106. Even if we spike to a new high, nothing will change dramatically. I still assume that there's a higher degree correction that should take.
Okay, I'm gonna stop sharing so we could see the pictures. Thanks for dropping in today.
Yeah, sure.
Grega,
yes,
I've seriously started considering that we might have actually seen the high for the dollar.
Yeah.
And I do expect a rebound in the short term. But I wanted your longer term view. Do you also think that probably the dollar has topped in the cycle?
Yeah, actually, here is, I think I shared this in one of our webinars. You can see here that we actually stopped at the upper channel. Very similar price action, not only the response from the upper trend line, but also in this distance compared to this recovery back in 2001 or so when we saw this top. So it's just a clear technical analysis. I will not comment on this macro or fundamental picture, but we know that so far we have to respect what the market is doing. We are seeing a very strong, pretty aggressive sell-off. And if you look here closely on this daily chart, this could easily be an ongoing bearish impulse. So when I said earlier that euro dollar could be potentially seeing a resistance here around 106, 106.50, I'm talking about actually this upcoming wave 4. So we are definitely here chasing some supports when you look back at May and these August levels. So this could be some choppy price action. But for a wave 4, so generally speaking, yes, I also think that we have seen some top here and that we will see more weakness. Also, dollar yen is even better. You can clearly count 5 waves down, and that's the broken trend line. We know what the US yields are doing at the same time. So if you try to link all of those, then yes, I also think that that US dollar could see much more weakness.
So then, but with the yen count you have coming in and a pop in yields, is that going to have any impact on precious metals?
Yeah, in the short term?
Yeah.
Yeah, actually, let me show this one first.
I think silver's over 80 on the DSI, which isn't extreme anymore. We've seen
Yeah,
90s, but
you know, again, we are seeing gold and silver today pushing higher, but look where the US notes are, still quite stable here, right? So in my opinion, I still think that we will potentially make a pullback out of this small wedge here, potentially into wave 4. And this could, on the other hand, lift the US dollar slightly higher. And this this could cause a limited upside there on gold. So I really don't think that we will see a straight push or break, very strong break or continuation higher on gold as well. Also, if we look at the 10-year US notes, you will actually see that we are right now testing or trading around these previous lows here from June. So I still think that there will be some kind of a pullback, and this could in the short term.
Yeah, and I think it's very, very likely that the timing is going to be Powell and the next Fed meeting next week. Yes.
Yeah, and also since you mentioned euro earlier, if I changed my outlook, or you can clearly see that it's a very clear defined Elliott wave structure. It's an ongoing impulse. I mean, you have all characteristics that's needed for very nice looking bullish trend. You have this very nice 5 waves down with an extended wave 3, which is now trading into resistance. You also have wedge. Clearly, this current leg up from November 21st is not that strong compared to the previous recovery. So in my opinion, that's just indication that we could be slowing down here. So I'm still fan of the Euro bulls, but I'm aware of this wave 4. And if I want to be long, I will definitely wait on this pullback first.
Okay, does cable have a similar pattern?
Yeah, similar, very similar, actually also in late stages of that wave 3 as well. Just a second to load the charts here. It's a little bit slow.
You got to get your hamsters to run faster so the wheel will spin. And
I have too many tabs open on other screens.
Nice.
Okay, here it is. So yeah, I mean, we came higher here into this 5th wave of wave 3. So I think that even this one could face a correction. But as I said earlier, some corrections are very, very deep and in 3 waves. Some are very choppy and sideways. So we just have to wait on this more price action before we can clearly define the levels, the support levels. But I think that the period of consolidation is coming.
Okay, so do you think that this pop in yields and, correction in the dollar and yen rallying back towards, wherever it goes is going to be negative risk?
Yeah, yes, I think. But here you have this this correlation with the S&P 500. You can see here in blue. Okay.
Yeah.
That's the correlation correlation between US notes and the S&P 500 futures. And you can clearly see that for this week, we have been in negative correlation here. Okay, we are not facing the positive correlation at the moment.
Right.
So maybe it's not that clearly, I cannot clearly define if that would be the case here. But I definitely think that we will see the impact more on the US dollar from the US yields. Maybe stocks just stay trapped or sideways.
Okay, yeah, that the narrative shifted a little bit about lower rates being bullish to that lower rates are coming because of economic weakness, which is
but this kind of a price action that we are seeing, some these correlations are probably just clear evidence that we are maybe in corrective phase here. And I really think that we will get more clarity and again positive correlations next week.
How about WTI, Grega? I see, I don't know if you have an ending diagonal. I have a bit of a reversal formation setting up here. Okay.
Yeah, I think that this is actually a wedge formation. We are now facing some very nice supports. We know that White House said that they could start filling their reserves in these levels. This been announced when? 1 month back or so. So clearly it's a technical level. And also from this perspective, it looks quite attractive for a potential bounce here. But still, I mean, it's a very strong drop from this week. So we have to be careful. But if we look on the 4-hour chart here, I can see 5 waves down coming into this very nice FIB support, also this trend line that I showed you on the earlier chart. So I think that there is actually a chance for a rally here going into the next week.
Okay.
And
Guys.
Also dollar Mexican peso. Not sure if you've probably covered this one as well this week. Notice that somehow this one is now trying to recover with 5 waves. Not still happening, but could be underway here.
Oh, Grega, you got to look at the Euromex. It's like one of my favorite setups right now. So it is really one of the best setups out there. It's been setting up all week, and it's finally starting to break out to the upside. You can see that it's like a nice bull flag pattern, and it's right at the 200-day moving average today. Actually,
I'm not wrong. We actually covered this Euromex with Cayman a few weeks back when we showed this up. And since then, I mean,
we've had a flat.
Yeah, exactly. We had a flat and now pushing to the upside.
Yeah, these are squeezing. I think a lot of people have been, really trading into Mexican peso strength all year. I know K-Man and myself predominantly, and like in our ForexAnalytix community, we've been doing it all year. But I think you had a lot of institutional people that are also, just playing the carry in an environment that is really, kind of sucked, so you're trying to get carry in different places, but that's unwinding right now. And that is a bit of a risk for, I think, for risky assets. And just in general, if you start to see the Mexican peso start to weaken substantially, like you're starting to see it, that's just kind of a warning sign that if you're long risk, you really got to start being a little careful here. So anyway,
yeah, you were about
to say
the Mexican peso.
The Mexican peso.
Mexican, yes. I said yesterday I had a little Dane Bramage myself, and so yeah, that's exactly what was coming out of my mouth. So anyway, good morning, everybody.
Hey, Blake.
Good morning.
TGIF, and I hope everybody's ready. I hope everybody's ready for PPI, and I hope everybody's ready for the World Cup, because I'm hoping the Netherlands comes through and beats Argentina today. And
why?
Because they beat the Americans. They beat the USA, man. So I just want to feel good.
They beat the USA. So you don't have to go through the misfortune of being tortured by Argentina.
Oh, whatever. Okay. Anyway,
they did it for you, Blake.
We've got a lot to cover in just about 13 minutes before the producer prices, but I am looking forward to the World Cup games, as I'm sure everybody else is here. It's going to be fun fix for all of us. Couple of things that have kind of got my attention going into this producer prices. Well, first of all, here we got the S&P really holding 3,900. We're coming back towards 4,000. Remember, the 200-day moving average is coming back into play right around here. So just as you're chasing risk higher, just keep that in mind, especially today if the numbers come in a little bit weaker. But I do think that the market's leaning into it, obviously, for a couple of reasons. You've got, the S&P, it's at its highs of the session, right? Same with you got, excuse me, really quick, not the S&P. Let me find where'd my NASDAQ go? You got NASDAQ's, moving higher as well. But take a look at gold. We have gold that's up at 1,800. That's just, again, suggesting that inflation day is going to be a little weak. The dollar is going to continue to weaken, and you've got the euro, right up into the 106 level. Now, Dale, I heard you say something that got my attention earlier. Okay. You said the euro dollars, has a double top. I'm not in the double top camp yet, and I know it's got significant highs, right? And I do believe that this 106 level is really key. But I get a little skeptical about calling double tops till I start seeing lower lows, and until we start seeing a break below, these levels here, I just, all it, is right now is just really, really critical resistance. And it might actually be building a bullish wedge at the moment. So I like the fact that we're rejecting up here, and that gives us, some argument if we do start to see a break higher in the dollar, and maybe the euro starts to break back below like 105. But for right now, that's just pretty key resistance. But look at everything else. You got the sterling that's back up at the really big 50% retracement, 123 level. You have a lot of people that are trying to play dollars on the long side, and it is a very difficult task right now, as the dollar index is just trading really heavy just in general, and with the dollar yen also holding that 138. I mean, we're trading back below 136 already. Dollar's pretty weak. But I want to ask you guys, what do you think? What do you think is going to come out with producer prices today? PPI, we have, as far as what we're looking for, what the market's looking for, we have PPI coming in at 0.2% for core and for the headline number month over month. Are you guys expecting? Do you guys think that inflation is peaked? Do you think this is it? Like, we're going to start seeing data roll over, universally across the board? What do you think, Stel? Do you think this is it?
Good question. I think we're starting to see evidence on many prints. Today we had the Norwegian CPI came in 1% below last month's print. So from 7.5 was expected at 7 year on year, came in at 6.5. And it's not just Norway. We're seeing quite a few of these. So I think there is a chance we're going to start seeing disappointment in PPI, CPI pretty much everywhere. But I think that's going to, as I've said before so many times, I think that's going to really manifest itself in the first quarter or late in the first quarter of 2023. Do I think today's number? I don't want to hazard a guess, because it's really speculating.
This is speculation, yes.
But I'm going to say that the chances are slowly growing for disappointment. And let's not forget, oil today is, 2 months ago, October, it was at 90 plus, $93. So we're now at 72. So this is going to start to manifest itself in the numbers as well. There is a lag, as always, but just have to keep that in mind as well. So I think the chances are, go on.
Go ahead. Continue, please. I thought you were stopped. I thought you were finished.
Sorry. I was just going to say that I think chances are increasing for us to start seeing disappointment. On today's number, I really don't know. Damn, I say that a lot, don't I?
Nobody knows for sure what the number is going to be, but as I was saying before, Blake, I don't know if you were already logged in. In my opinion, I feel rather confident about one thing. If the PPI surprises and it's stronger than expected, we're going to see a bigger reaction than the opposite, because the market participants have already started being cautious ahead of the Fed next week. So they've already started, paring back risk on positions, etc. And if they see a stronger PPI, that reduces even further the possibility that Powell is going to give them something, they will like next week.
So what you're saying is, if we get a strong number today, we get a strong reading, it's going to produce a bigger reaction to the downside.
Absolutely.
Yeah, I do not disagree with that. I don't disagree. I do. I think
negative.
I think it's got to be bigger than last month, though. It can't.
What's that, Ryan?
I think it's got to be bigger than last month. So if you take the headline number, 8% last month, it's got to be bigger than that to bring the scenario I think that Steve's talking about. Because if you want to talk about has it peaked, it's been down. The headline number has been down for the last 4 months on the trot, since 11.3%. Back in July, which would have been the June reading. The core number has been down every month since the March reading. So it's, how do you want to call a peak? It peaked at 9.6%. It's now 6.7%. So to get Steve's surprise, it's got to be higher than last month. If it comes in between the 7.2 expected and last month, it still continues to trend lower.
Well, I can tell you right now that the market is not expecting it. We have the dollar slumping as we speak, ahead of the data. You have the Aussie that's trading near its highs. The sterling's trading at 123. The euro's closing in on that 106 level. So the dollar's real, and the dollar yen's obviously breaking down too. So we just broke the 50% retracement. 618 comes in around 135.25. That's probably a realistic target for today. For the dollar on any PPI miss is going to be down here. So, the market's definitely expecting it. But I have to go back to what Steve said. If it's not weak enough, or maybe it's a little stronger than expected, you're going to see a bigger reaction. Now, let's talk really quick, just going into next week, or not even next week. We also have University of Michigan consumer sentiment and inflation expectations later today. So you guys keep that in mind as you're watching the first World Cup game. But we have CPI data. A lot of people don't believe that this data is going to produce much of a move, and it's all about CPI next Tuesday. I was meeting with Chris Weston earlier this week for the trade-off show, and he gave me a really interesting statistic that the market's pricing in a bigger move on the CPI data next Tuesday than FOMC on Wednesday. Isn't that wild?
Really?
Not necessarily.
Yeah, that's
maybe not.
That's what the market's pricing in. It's like pretty
the beginning of the Fed and Jerome Powell's irrelevance.
What's that?
It's just the beginning of people are going to start paying less attention to. He's losing credibility. He's flipping like a hamburger.
Credibility. I don't necessarily agree with that, Dale. Maybe it's because he's becoming less relevant since we've already moved where the market believes he's going to move to, right? Like the margin of error on Powell and what Powell's thinking at this point is probably a lot smaller because we've moved so aggressively, or he's moved so aggressively with the Fed and interest rates over this year that people think that there's not going to be a big gyration from here. But
I think he's following the markets, Blake, and the yields were dropping before he made the Brookings speech.
And what's dropping?
Yields were dropping before he made the Brookings speech.
Yeah, and yields.
He's following the markets.
They're definitely in breakdown territory. You look at like the 30-year and the 10-year. I mean, we're below these big breakout points, which is really interesting. And I was kind of waiting on the 30-year
here.
What's that?
Although I think we shouldn't be chasing this move here ahead of the Fed. I think it's dangerous.
Yeah, it is. It definitely is. Hey, look, I'm gonna go with this as we're heading into this data. We're nearing the 200-day moving average in the S&P. We have a lot of resistance, and everybody's looking up here. And it's all about next week, guys. It really is. After the CPI data on Tuesday, I think we'll have a pretty good idea. I know we have the Fed and the Bank of England and the European Central Bank after that, but we'll have a good idea if we're heading, 5% higher by year end or 5% lower by year end, probably following the CPI data next week. So I think it's going to be that critical. Really, we have. Well, let me just make sure. We have about a minute and a half before data comes out. So let's go ahead and put the dollar index up here first. I'm going to put the dollar index right here. Let me get rid of this support zone shaded area. I'm going to put our charts to 3 panels. We have gold, which is at the highs of the session right here. Here's the S&P, which also, it's holding a pretty nice bid. I'm going to put it. There we go. That's a better chart. You can see here's the S&P right here. There's the dollar over here and gold. And we're going to put up, from ForexAnalytix, we're going to put up our data flash. Oh, there it is. There's data flash. I'm going to move that out of the way, put our charts back up. And so we're going to get instant reaction here. All right, guys, any final prayers? Ryan?
Come on, England.
Dale?
Let it happen.
Stelios?
Just trade the reaction.
I was going to give you the I don't know. Steve?
It doesn't matter.
We covered everything we had to say ahead of the data, didn't we?
There you go.
I just want a last minute prayer from you. That's it.
Okay.
Yeah, for prayer, you definitely came to the wrong person.
Yeah, I know. To the atheist Steve, you got it. All right, guys. So we're about a few seconds
5
away.
seconds.
Heads up.
Okay, let's go.
Stocks
S&Ps
are
green. Slightly better.
Whoa,
Support.
whoa,
Oh, there
Slightly
goes
better.
gold.
Hold on. Look at the
Yeah,
dollar
dollar.
just ripping. Woo! Gold has just sold off.
It's
Oh
still
my
lower
goodness.
from the last print. The last print, by the way, revised higher 0.1.
Yeah.
It's still lower, so the trend is still there.
Yeah, but
Yeah.
people
Guys,
aren't going to
closing
focus
out
on the
my,
trend.
dollar. I had some
Yeah.
dollar longs. Just closing that out.
Well
Okay.
done, Tony, for being short the S&P.
All right. Very
Yeah.
good. Like I said, I was long some, I was short some sterling is what I was doing.
That was the bigger danger ahead of the data. Seeing stronger
I think
data.
everybody was leaning into it. And if you're in the ForexAnalytix chat room, here I'm just going to go in the trades room. Closed shorts.
I think that's a far bigger reaction than what the data
That's
needs.
exactly what Steve was saying.
Yeah, I've just sold some dollar yen at 66. It's pretty much bounced 100 pips. That's big.
So here's the ForexAnalytix trades room. So I have to update this just because we're live on air right now, but you can see you can see my open positions. You have to scroll up to yesterday. You can see them right here. And you have to just kind of continue to scroll through. This is and here's our general chat room. You guys, if you're in the chat room right now, you're on Jumbotron, so say hello. So you can see there's a lot of us just chatting throughout the course of the morning here. And actually all day long, every trading session, we have a very, very busy trading community. So if you want to learn how to be a part of ForexAnalytix, join the trader funding program or check out, ForexAnalytix.com. What a great reaction, guys. Congratulations to all of you that were taking advantage of that. Dale, do we have an interview today?
Yeah, a new guest.
Oh,
excellent.
Shoot.
Awesome.
Well, but Dale, I'll get to you last. Stelios, any final thoughts before we leave?
I just want to say 66 you sold, Ryan. Is that a World Cup inspired number? Sorry. Good sell. Very nice.
Good omen.
All right. Ryan, any last minute thoughts before World Cup Friday?
For World Cup Friday, no, as you said, keep an eye on that Michigan, especially those in inflation expectations. They're going to be big for the Fed next week.
All right. Steve, any last minute things? I think Steve.
I think it's very likely to get the PPI data to, in essence, push in the direction of what we've seen during the past few days, meaning investors being more cautious. And I think that's going to be the theme until we get the Fed.
Awesome. All right.
Kudos, Grega Horvat, on calling this, move in yields that we were going to get a pop in yields. So
yeah, is Grega still
nice
here?
Call,
I was going to ask Grega any last minute thoughts, Grega?
Yeah, actually, despite this data, I think that markets will again try to focus what Powell will actually say. So in my opinion, if he said that they will slow down the hiking pace, I think that current dollar bull will be just temporary. And as I said, a corrective. Awesome.
And Dale, I want to say thank you for being, here every single trading day, even with the
I'm
sniffles.
the Iron Man.
You are. I'm,
the Iron I have iron poor blood, and I'm the Iron Man.
Cease to amaze me, Dale. Hey, listen, I want to thank everybody for being part of ForexAnalytix and the F.A.C.E show and the F.A.C.E experience every day. And don't forget, Dale's got an interview coming up, a new guest. So I'm happy to hear this new guest that's coming on. And don't forget, we do have University of Michigan inflation data. So if you're watching football a little bit later, just keep that in mind. Thanks, everybody, for your support as always. Dale, it's all yours.
All right. Thank you, Blake team. Have a great weekend.
Oh, Ryan, I'm sorry, Ryan, I missed you. Holy cow. Sorry, Ryan. I was thinking you were just thinking about football. So
yeah, don't mind me. I'm only small.
Ryan, we'll miss you, buddy.
Cheers,
everybody. Oh, by the way, I'm sorry, Dale. Ryan does have a great blog post that's coming up for the weekend. So make sure you guys read that, because Ryan, it's ahead of the Fed, right?
Yeah, that's it. That's it. Some explanation of what's going on.
Right on. All right. We're all looking forward to reading that. Okay, Dale, now it's yours.
Perfect.
You sure?
All right. Oh, wait. One last thing. Go ahead. Sorry.
All right. Hey, Jack, welcome to F.A.C.E. A pleasure to meet you. Want to thank you for taking the time out of your, especially on a big number like this. I don't know about your trading style, but I'm asking you to unmute right now. Welcome to F.A.C.E, Jack.
Hey, man, appreciate it. Thanks for having me here.
Yeah, it's
Fun
great
show.
to have you. Did you want to share your screen during this interview and show some things? Because if not, I could do that and we could move around the markets.
Either way is fine with me. I'm
Okay,
good
well,
either way.
let's see your setup. The share screen's at the bottom.
Yeah,
it's a green
gotcha.
button.
Mm-hmm.
And before we get to data and markets and trading, it's always interesting for me and for the viewers to know about what people were doing before they got into the industry, and what their first gig in the industry was, and just the journey. Jack, you want to tell us a little bit about yours?
Sure. So I am a pharmacist by trade. So that's what I do outside the house. And I started trading markets about 10 years ago. And like most people, I went ahead and tried everything under the sun first. Fundamental data and all kinds of different things, and eventually got into technical analysis. Yeah, it's just kind of what spoke to me, with the visualization of price. That was really what really spoke to me. So that's what I've been doing since. And again, I've been doing things, in the beginning I did things the wrong way and made all the mistakes that probably every new trader makes, and slowly over time tightened up processes and everything else. And now, I'm where I'm at today, and I know I'll be a better trader, 2 years from now. And it's just always a journey and a process of getting better in the markets.
It is. That's the challenge, and makes it interesting. How many years would you say it took you before you made some breakthroughs to where you were consistent, semi-consistent, at least had a level of conviction that this is a way that there is a way you can win?
Yeah, so it probably took me about 6 years or so. It wasn't, I know some people say 3 years, 4 years. For me, it was about 6 years. But luckily I was trading real small at the time. So, every time that, you got some feedback from the market that was, some negative feedback from the market on your trading account, it really didn't hurt me that much. So I only kind of started building up my account, after that negative feedback was less.
Okay. Jack, did you have any mentors or books that were major influences that helped you out along your road?
So I guess, I like How to Make Money in Stocks, William O'Neill. I think that was a huge book for me.
Yeah. Relative strength issues, kind of looking for leadership and laggardship, right?
Yeah. Love relative strength. And I do a top down and a bottoms up, through scans and stuff like that. I like Minervini's books. I think Think and Trade Like a Champion was a great book for me.
Okay.
And Weinstein. I liked Weinstein a lot too.
Oh, yes.
Yeah, I think those understanding market structure, I think he explained it excellent in his book. So if I had 3 books to that really changed the way I trade, it was those 3 by far.
Okay. All right. So let's get to what's been happening. 2022, rough year or good year for you?
Yeah, so it's funny. On my Twitter feed back November of last year, I wrote a post that said, I cautioned everybody. I said, listen, I just told my wife how much money we're making in the markets, right? So everyone just be careful, because once you do that, it's all over, right? And that literally was probably within a week or 2 of the top of the market. So it's kind of funny. But
okay. Yeah.
But 2022 is it was challenging in the first half, and then I traded it much better in the second half.
Okay. All right.
And I'm sorry.
Why do you think that is? Why do you think it is that you made the adjustment to the new regime? started realizing that, what had been going on for 10 years, that game was over, like fangs and,
Yeah.
just find a spider and you could, be a genius.
Yeah, pretty much. It took just me a little bit of time to adjust to like I said, the new regime. And it wasn't so much where I was trying to cling to the old leaders, but I don't think I wanted to realize that a major market top was in, and that's what we had. We had a major market top, and
Right.
We'll see if in 2023 if it if we're at the bottom or not. We don't know yet, but my guess would be that there may be another leg down. That's my guess.
Okay, and I noticed you're, I went to your stream, Jack, and I noticed you're a stock picker as well. You don't just trade indices; you trade individual stocks as well.
Correct.
Okay, all right.
Yeah.
Any sectors? In December, people start to think about their future and what they did. They're being reflective and campaign trades and your outlook. I know it's a day at a time, but have the markets shown their hands with things like the gold ratio to banks and the S&Ps beginning to shift towards hard assets and away from paper?
Yeah, so that was, I was actually looking at bonds the other day, and I think that kind of goes into your question. And even though, and here's the 10-year yield, I think you guys could see that,
Right.
we had, the big run up as the Fed is, raising rates and everything else, and even beyond this. And they're still raising rates, yet we're seeing interest rates fall, right? The 10-year yield fall. And so that flight to safety, right? People buying bonds.
They're worried about economic weakness now, not inflation. Okay.
Right. So I think the narrative has changed, right? So in November, the narrative changed, and so so whether there's a recession coming, whether we're in a recession already, who cares, right? But the narrative changed, and I think that is something that we need to all take notice of,
Okay. I'd like to go back to your S&P chart, and you had the line that the whole universe is paying attention to. Doesn't it seem too pat? And I think we could get, we're getting whacked today. I'm not looking at my prices right now, but doesn't it look like there's destiny for this after a pullback to break out above it, to really create some bullishness, even if the bears are right and we only trade up around 4,400 and roll over again?
Yeah, I mean, so I think for me, the bullish scenario would be this pullback, and then you get some strength. And at that point, your 200-day moving average would be flattening. So if pricing get above a flattening 200-day moving average, I think that's probably the best case for the bullish scenario, right?
Okay.
Because a flattening to rising 200-day would change my outlook on the market, right? Price under a declining 200-day, and I'm going to have a bearish tilt always in the market. Price gets above a flattening to rising 200-day, and now I'm going to switch my tilt to more of a bullish tilt.
I know a lot of people are hoping we get a rally up towards 4,200 to get short. And you know what? I understand the case for another low. I see two drives there, but it's almost like it became, it's becoming the consensus view that, we need one more flush. We never had capitulation. Maybe the market's going to be up into the Fed's face into the spring. Could that happen?
Yeah, well, listen, that was me on the COVID lows. I was the guy who was saying, we're not going straight up. We got to have a retest of the bottom, make a double bottom, whatever. And so I was late to jump into that rally because I'm saying, okay, this is a place where we're going to get it's going to start to pull back.
Right.
And it just never did.
We get married to a narrative, and then when it doesn't happen, we become like a deer in headlights, and we have to wait for the market to reset again. Right.
Yeah. That's exactly right.
I've done that a million times, Jack.
Yeah, it's the way it works. but I'll be honest with you, it's different this time. And then the reason why it's different is that back then the Fed was cutting interest rates and pouring money into the economy. We don't
Right.
have that this time. So
You don't.
so it's not the same scenario in any, not even close, in my opinion.
Okay. So, what, I would say that some of the star sectors over the last quarter or so would be miners.
Mhm.
What are your favorite sectors to either short? The banks really haven't participated lately, and if yields are going to continue to drop, even though they're popping here for a while, how do you feel about the financials in here?
Yeah, so XLF. I'm gonna go to let's go to a weekly chart on XLF. Okay, so this is the area that I said had to hold, right? So we're
Yeah.
going back to the 2007 highs,
Yeah.
2000 right over here. It retested it, came down, support held, right? Right
Yeah.
there. I mean, huge spot, right? This $30.
That would be analogous to what, Jack? About 1,500 S&Ps, which we never, maybe this is a foreshadowing that if the XLF could do it, one day the S&Ps will come back to that same type of level, which
Yeah.
was 1,500 in what, 2000 and 2008. I think we had the same kind of setup there.
Let's take a look here. 2000, 2008. Let's see what it looked here. That was roughly, 1,500.
Yeah.
Exactly right.
Yeah.
Yep.
So if you had the same time frame chart, it would look almost identical, except we haven't gotten down there.
Yep. Exactly.
Yeah.
So that'd be crazy.
Okay.
All right.
right.
So so this is the XLF. So this is the area that had a hold. It did hold, which I think is, constructive, obviously. And now it's back to, this general area. And you see, volatility has been, as it's coming up into this resistance, it's been kind of expanding, right? And so, it couldn't get above it, false breakout right over here, fell below. We'll see if it continues lower. Not a constructive looking chart right now for me. This is definitely something that, you still have a declining 200-day, even though price is above it. I think this chart goes lower and looks like it's going to already this morning.
Okay. All right. Why don't you, instead of me guessing,
Yeah.
tell us what, you're positioned in or what you're looking to position yourself in.
Sure.
Just your view. So I know you think the market's going to go lower next year. Are you positioning yourself for that, and how would you do it?
So my time frame is usually, weeks. It could be a couple of months, but it's not super long, in the future. So I'm looking right now, I'm just looking to finish off this year, and then, I'll start looking into next year. So over the next few weeks.
Why don't you take the rest of the year off?
Right.
Like the hedge funds, I always look, I've been doing it a long time, and I always ask myself, why am I, trying to make your year in December, which a lot of people are still trying to do, is like trying to make your week on a Friday.
Yeah.
The big money have closed their books. It's okay to do nothing, isn't it, during the month of December?
100%. And I'm probably right now about only 25% in the market.
Okay.
So that's where I'm at.
Yeah, I'm looking forward to next year already. I'm starting to think about next year. So, okay, iShares Biotech. Okay.
Biotech. Right. Sure. Yeah. So beautiful looking base. That's the way I look at this.
Real nice.
It's trying to break out. It kind of failed right here. So now it's kind of on watch, right? It's a little suspect at this point, but different than most of the other charts is you already have a 200-day that's already flat to almost rising at this point.
That's a big part of your analysis, the flattening out of the 200.
Yeah, I mean, especially for that bigger picture look, there's nothing better than the 200-day, in my opinion. And not because I think so, because that's what all the other market participants want to use, right? So we don't really care what the average is, but if everyone's using it, then it has some importance at that point.
Okay. Saucer bottom.
Yeah, beautiful saucer bottom. Again, try to break out, kind of failed, but kind of came back through. The orange line is my 23-day EMA. And I like that one, just for, medium-term trend. And it's it's up and to the right. And so I am invested in biotechs. I have been from back in here or so when I broke out of this area. And so I added to my position a little bit here, and we'll see. You know, if
Do
it
you
breaks down.
consider do you
Mhm.
consider biotech a bit of a defensive group?
You know, biotechs, no. Healthcare, yes. So,
Okay.
you know, biotech is for me, that's a very risky area, and so I won't buy an individual biotech. Very rarely will I buy an individual biotech.
Right.
But that's why I trade the ETF.
Okay.
Too much risk there. But yeah, so healthcare I do consider defensive. Biotechs, you know, it's a technology company, really. You know, in a lot of ways. So
Yeah. Really
um,
nice looking chart there, Jack. You know, the star last year was oil,
mhm,
not the commodity, because the commodity topped after the invasion,
yeah,
but the shares were printing money, paying dividends,
sure.
great yield play. I know they've come off. We've broken down a little bit. I thought maybe around 80, it might be worth a shot down
Yeah,
there if we got there in
yeah.
the
Here's
oils.
another one that was, you know, basically from 2008, right? And
Yeah.
kind of false breakout here, came back up to the scene of the crime, and still can't bust through this area, right? An
Yeah.
XLE, you know. So another 2008 analogy.
That's
Um,
interesting. Yeah.
yeah.
So, I mean, cruise at 70 now. They look like two different charts,
Mm-hmm.
even though
Yeah.
they're related. You know, to me, I've never seen anything like that. And you have to believe. I was always taught that the stocks lead the commodity, so maybe it's WTI, that the commodity itself, that's undervalued.
Yeah. I mean, could be, but this is like for me, like
Bearish.
bearish, right? There's no reason to be, you know, and it's just avoid, right? And I mean, you could short it if you want to, I guess, but
Yeah.
for me, it would just be an avoid. I'd rather be on the long side of the market than to short. That's just
Okay.
my personality. It's, you know, it's what I like to do.
How about things that if you drop them on your foot, it hurts, like copper, gold, silver,
Yeah.
any of those miners, ETFs, like, I don't know, GDX,
Yeah.
COPX appeal to
Hmm.
you?
Yeah. You know, GDX looks good, right? I mean, that looks real good right here. It's kind of like at its inflection point
Yeah,
right here.
I would
So
certainly buy a pullback to 26.
yes, exactly.
Yeah,
Right. So for me, right, you got to pull back somewhere in
it's
here, and then you can
yeah,
buy it here, and then it's very easy to manage risk
yeah.
right there.
It's on my shopping list.
Yeah. Yeah.
So yeah,
For me, a breakout here though would be a fool's errand, because it's most likely going to have some sort of pullback before it goes higher.
launches. Okay.
Yeah.
And does the dollar, that's our bailiwick, the dollar FX, does the movements in the dollar, you pay attention to them? Does it, is it part of your macro analysis, what the dollar's doing?
It is. I'll be honest. I thought the dollar was going to come back up to, again, going back to a weekly chart, you know, going all the way back to, you know, here's 2002, right? 2001,
Yeah,
2002, and it
yeah,
was at 120, 121
yeah.
ish, you know,
There
right
were a
around
lot of
there.
people calling for 120. They still are. If
Listen, maybe,
104 holds, isn't this really
yeah,
the line in the sand for the bull case where we're at in the dollar right now, with your
100%.
eyeball?
Yeah, that's where I have my little green line right there. You know, that was
Yeah.
the 216 highs. That was the 2020 highs. And now will that be support? Maybe. We'll see. We'll see. But this is the spot, right? It's like right there.
Okay. So Jack,
Yeah.
do you have a business model, or you're just on Twitter sharing ideas to help people and you just trade your own account?
Yeah, so I trade my own account. I do every week I drop YouTube videos. I go over my on Saturday I go over my whole, I call it state of the market, you know, where I see, like, is it healthy market? Is it a sick market? Because I think that's always where, you know, we should start our trading, right? What kind
Right.
of market are we in? And then on Sunday I do a stocks to watch video on YouTube. Again, that they're both free. And I basically go over the best ETFs and the best ideas I can find going into the week, you know, and the setups that I'm looking at.
Do you do it because it helps you?
Oh,
I know that,
100%.
you know, when you're doing these things, you know, it's like NLP, the more you hear yourself say the right things, the more you're going to react that way. Kind of like, sets a paradigm for you. So
Yeah.
you do this, it helps people, but it also helps yourself, even though it's free.
Yeah, 100%. It helps me. I'm doing the work anyway,
Yeah.
and I'm doing the work anyway, and so I share freely, but it forces me to be regimented and structured in what I'm doing in the market. So it's actually been very, very helpful personally, in me, for me.
Okay.
I post on Twitter as well at AlphaCharts365 is my handle. You're welcome to follow me if you want to. And I do offer a super follow group through there. It's super cheap. It's because they only let you charge like $10 or something for it. And then I do
What kind of group is it?
It's called a super follow. It's through Twitter.
Huh.
And
okay.
yeah, and basically people sign up. I think it's $10 a month, and basically I
Okay.
put out extra notes throughout the week, a couple extra videos and watch lists and things of that nature, a little bit more in depth of, and basically it's just me talking out loud on what I'm thinking through on the market, more in depth, basically.
All right, Jack. Well,
Yes.
that's I think people should check it out. And I'm showing your Twitter page right here. So here's Jack. And you're now my trading warrior, brother, because we've talked to each other and you survived the interview.
Absolutely, Dale. I appreciate that, man. Thanks for having me on. It's been a lot of fun.
Great having you on. Why don't you give us your best idea? Be Nostra Jack, and your best idea for 2023.
Oof, we're 2023.
Yeah. I know it's way out there, a whole 3
I know,
weeks,
right?
man.
I mean, right now I'm only in two things right now, which is IBB, and I'm short via TZA, small caps. So I don't know if I have a good idea at this point, but I would say IBB. IBB is my favorite right now by far.
Okay. All right. So we'll go with that, Jack. And I really appreciate you taking the time. Happy holidays, Merry Christmas, and let's do it again down the road.
You got it, Dale. Happy holidays again. Take care of yourself. We'll talk to you soon.
All right, everyone. Jack Thatcher. Do I have it right? Is it Thatcher?
Thatcher, but it's good enough.
Thatcher.
Yeah.
Jack Thatcher. And you can follow Jack at AlphaCharts365, which means he's at it every day. Perfect. So thank you, Jack. Rooting for you now, buddy.
All right, man.
All right. That's a wrap, everyone. You could join the team in 20 minutes for the Morning Edge. Hope we added value to what you're trying to accomplish. As traders, it's not easy, but you have to be able to get up off the carpet if you've been knocked down. That's what champions do. So don't just count your pips, count your blessings. You're welcome, everybody. Have a great weekend. It isn't easy being cheesy. For me, it is, Richard. All right. Take it easy. See you, Jack.